So for this week we have picked deviation versus confirmation in price action trading, and I'll cover a bit of shift in market structure and BOS and jog because someone just asked me about it in the chat. So first of all, these are just two simple lines. I'm gonna explain you on a pinpoint black chart that how you're gonna differentiate between a deviation and a confirmation. For example, you have price action developing from the swing lows, and this is the key level. You break out. Now you say this breakout has confirmed and it's retesting the key levels and gonna take a long year. However, this is not a confirmation. Why? Because this semicircle pattern, which looks like a semicircle, is performing a deviation here. It can go like this and it can go like this as well. So you have kind of a gamble trade here. You're not confirmed, you do not have confirmation. What you want to be looking for is a bounce and some sort of a resistance up again, which will reject. This will become the support, and this whole region will become your SR flip region. You have seen me using the words SR flip region. You have seen them on the box charts, the green boxes, red boxes, which would somewhat look like this, because where the support turns resistance, resistance turns into support. So your confirmation would be this is your former high. Now this is your former high. A retest of this former high, that's your trigger to take a long, and that's your target above some sort of a resistance over here. So if I take a long tool chart, it would look something like this, and your stop loss as always would be the below the most recent low. So this was your higher low, this was another higher low. So below the previous higher low, which I use it as in my terminologies as the most recent low, you're going to place your stop loss just below that, and that is also going to be your key level. So that's first of all, I'm going to take confirmation and take a long position on confirmations. Opposite to that, you can do shorts. It's just the same thing. And now we're gonna simply talk about deviations. You have the same PA coming up again. You form the semicircle structure. That's your deviation, but that's not a confirmation that it is a deviation. Why? Because it can go like this and do this thing which just happened around here. So for a break of the deviation, same thing on the opposite side. You want a breakdown, you have some sort of a small support here. It will bounce from here towards the key level. This is still not your confirmation. It is, but it is a high RR, low RR trade, because this is risky. If you're gonna take a short like this, you will place your stop loss just like this, and you may win it, but for me it is not a confirm. For confirmation, what I wanna be looking for is reject from the key level, dump again, put a new low. The keyword is a new low. Over here it was a new high, for here it will be a new low. Then from the new low you bounce and you retest the former low. This is your confirmation right over here that this is going to break down now, and you can enter a position here. Same as before, you take a position here, your target somewhere down there, and your stop loss would be above the key level plus the most recent high that was created, just like about that. So that over here simply confirms your confirmation, and that simply here confirms your deviation. Confirmation on either direction for a long or a short, and deviation on either direction for a long or a short. The keywords that would be used throughout all trades that you want to be looking for are breakout or breakdown, then you want a new high or new low, then you want a retest of the former high or low. Again, I'll mention you where the former is. The former is this thing which previously had a breakout. Retest of the former, stop loss below or above the most recent high or low. That's it. That's the most simple price action trading strategy I use throughout all trades, and this is basically what happens throughout all my charts. And now I'm gonna take a real chart example in front of you on PYR. Pick this chart because it looked clean for the price action. If you go below around here, this is your channel which broke out, but we're gonna be focusing on price action here specifically. So first of all, you had this key level. Why is it key level? Deviation. Okay, as soon as you had a close above, you pumped. but this was not your confirmation, because back to the example above I showed you, you do not have a close above a new high and a retest of that. So what happened here? If someone long just this breakout, they lost because it broke down again, it deviated again here, so again it broke out, and now this time when it broke out, it had this former resistance around here, it had closes above. Now for the first retest, you had this whole area is acting as support. Now this resistance has become support and it is acting as a retest area. However, you do not enter, especially mid cap altcoins, you do not enter all your position size on the one bid. Instead you want a dollar cost average. Now you have the previous high of the breakout around here that led to this breakout here, breakdown here, and you have a new high with a retest over here. So you DCA throughout this whole box. Now you have your new high retest, you have your key level former retest. For example, you'll take a long position like this, you'll target your resistance like this. Your stop loss in this case will be below the most recent low, which in this case is this deviation that previously happened. If however you just happen to place your position right over here, you did not dollar cost average, not considering that it is a mid cap altcoin especially, then your stop loss would be below the most recent low, which again back to the examples above would be between your most recent high over here and combined with the key level, and the stop loss will be slightly below the key level, just like uh, below this wick over here. That was your confirmation on PYR. Let's see if I can find another confirmation right over here. This was basically your confirmation on a break, retest, actually break, retest, new high, retest again. That's your position long. However, like I said, you want to DCA this whole area because this is a mid cap altcoin. Let's check if we can find a deviation. You cannot short PYR, but let's say you had some sort of a deviation somewhere and it was possible to short it. What would you do? Let's check. All right, over here, let's go on the daily and look for a better key level. So first of all, this is your key level. Back to the key levels lesson I posted last week. Why is this a key level? Pump, rejection, huge, reclaim, pump. On the other hand, another confirmation, breakdown, retest, rejected again around this level, hold down. So this confirms the key level. Now back to the H4 chart. I'll show you what went wrong here if you were trading this. So let's say you are a PYR maxi and you took a long over here and you're targeting like all-time highs, I don't know where, and you're not using a stop loss. Okay, now you did get this breakout, okay, deviation, which back to the previous lesson, new high, retest, that's your confirmation, trigger right here, that's a whole long. However, now we are talking on the macro time frame. What if there is a maxi and he's not using a stop loss? Well, this whole thing is a deviation right over here. Now if someone missed this whole rally from here towards here and they are looking to enter on retests, let's say here, and they're not using a stop loss, ideally you would have this pump, you would move your stops to break even, but let's just assume the person is not using a stop loss to break even. What happened here? This whole deviation, alright, breakdown, you had a retest of the key level, a breakdown again, this whole sell off, then you had this former low which got retested over here and had a rejection again. Like I said, for mid caps you would ideally want to use a dollar cost averaging box, and if PYR was shortable, you would enter a position here all the way up towards here and you would put your stop loss above the most recent high, like around this, or you can also put it around this level because this is a key level for this deviation as well. What happened after that? Breakdown, and that was like bear market from this end. So Previously I showed you over there how a confirmation would look like if you're just interested in long. Here I showed you how on the macro, if you keep looking for retests, you missed rallies and you're looking for another retest, you usually ignore the bigger picture, which was right around here, this whole deviation, and then you take losses in cases like this right here. And today when I closed KDA break even, why did I close it break even? I covered it in my previous video right now as well. Basically what happened was, first of all, the daily broke out, but the daily closed below back again. That's my first confirmation of invalidation that this is not looking good. Secondly, on the 4-hour chart you have this deviation here. Now it broke down, it's retesting this key level. What can happen is it can reject here, it can retest this former low here, and it's continue to break down. The invalidation however would be, this is the deviation. What I want to see is rejection here, retest this key level, put a new high, retest the former high as on the lesson I gave you before, trigger here, that's a long again, and I will call this in the group if I get my confirmation. However, for now I've exited at break even, and now you know the reason why I exited at break even, just because you have this deviation which is testing the key level right now, and it can reject and do something like this and break down and take the stop with it right over here. So it is better to take it as a break even right here, be patient and wait for more confirmation. I hope the okay, I missed something. I missed shift in market structure. Someone asked about BOS and chalk. I told them in my previous videos that I do not know about BOS and chalk. I'm still in the learning process. I do not use it as a basis of my trades. However, SMS, you will see it on my charts, the short form, a shift in market structure. A shift in market structure is simply the same thing as I just taught you. It is deviations. So for this, let's say for this range from confirmation D to accumulation levels, what would be a shift in market structure is that this is the whole deviation and we are trying to break out here. So if we get to this take profit around this level, you would say this the confirmation D level has turned into a SMS, that is a shift in a market structure. Below this level we had a bearish price action, above this level we are having a bullish price action. That is simply that is a shift in market structure, and that will form another higher key level, because first it had a confirmation on D, and once it broke out it gave you a signal that this level has now initiated a whole change in price action on the macro time frame on the whole chart. So you can label it as a SMS as well. I hope it was clear now how you are going to take trades based on confirmation versus deviation and avoid getting rickrolled. You know, it's very easy in this market to get faked out in either direction, require a lot of patience. You've seen me on my Discord, I do not trade much, and it's like days go by and I'm not trading because I do not have my confirmation. I always wait for my confirmations. I'll risk less because losing money is worse than not making any money. We all know that, right? As soon as I have my confirmations, I take my trades. And let me just show you what happened, why some people were saying you did not call this BTC long, and I gave this plan in SSR server. What happened here again, same thing, we had a deviation. Okay, we had this key level, we had a breakout, here that failed, did not have confirmation. After that, however, when we broke out again, this was actually a kind of you can say aggressive play. But if this was the resistance and a new high was put here, you actually had a high here. Actually, wait, look here, if you take this as resistance, you have this breakout that barely retested here and had this move up. It is the same thing which I just taught you before on confirmation and how this BTC long was taken. I actually honestly got a little bit lucky. I slept, so my entry was around 20.7k level. Saw sell off at the daily close, took a small long and 1 hour risk as usual, placed my stops below these lows, woke up and it's just mooning. Got lucky over there. However, your confirmation was still on the chart if you followed it from start to bottom. This was on the lower time frame. Now I showed you higher time frame on the PYR chart. What you really want to be keeping into account always is this thing. You can screenshot it and you can always remember how a deviation is going to look like, and how a confirmation is going to look like. That was clear, and now you can you know more about price action now. I'll see you on the next one.